Yo, what's the dealio, man? Listen, you already know we got a banger for you today, all right? Today we got a trade of the day. We had a great day, another great day in the Discord. So I'm going to talk about HIMS today, all right? HIMS and HERS Medical. That stock has been pumping. It's been booming lately. It's very volatile, and so I like a volatile stock because it goes up, it goes down. And so I'm going to talk about how I hit 32% on HIMS today, all right? And we hit HIMS in both directions. We got it to the downside and we got it to the upside, all right? So like I always say, this is a percentage game. This is not a dollar amount game, okay? This is a percentage game. If you can figure out and learn how to make 20% a day, 10% a day, 8% a day return on your money, at some point in time, you will be rich as long as you can be consistent. You don't want to be negative 20% one day and then up 10% and then up 10% because now you just negative 1%, right? You want to be consistently up. I don't care if you up 1% a day. If you up 1% a day in 100 days, that's 100% return on your money. It's all about the perspective, okay? It's all about the perspective and how you look at this stuff. So I really want you to understand what this really is about. This is not about trying to get rich in one trade. Stop trying to get rich in one trade. Focus on compounding your percentage gains over time. All right, that's all this is about. Some days you're going to have bigger days. Some days you're going to have red days. That's just part of the game. But I want you to understand you got to compound your percentage gains. All right, because the bigger that your account goes, the more money you're going to be able to leverage at some point in time. All right, so with that being said, if you're watching this video, be sure to like this video, comment, let me know if you made some money today. All right, and we're going to go into it. We're going to go into the trade of the day. We got HIMS, okay? So the first trade, I got it to the downside, all right? And then the second trade on HIMS, I got it to the upside. The first trade was a 20% banger to the downside. The second trade was a 12% banger to the upside, all right? So I'm going to go to the charts and I'm going to show you guys exactly what happened. All right, so let's get it. So as you can see right here, we got HIMS. I've been looking at them all day. Let's go to the 15-minute. All right, cool. So first trade of the day. So let's assess this real quick. So HIMS closed yesterday at right here, right? Yesterday's closure was 56.75. All right. So this was yesterday's closure. So I wanna break this down for you guys so you understand. So this is where it closed at. Okay. So this white line is where it closed at yesterday, right? Now it opened today at right here. Okay, at 61. So the white line is where it opened at, right? So follow me. Follow what I'm saying on this, okay? So y'all can understand what's going on right here. So this is where it opened at, all right? So this right here is what we call a gap, okay? This is what we call a gap, all right? This is called a gap up, actually, all right? So we're going to call it a gap, and the stock gapped up, all right? So the stock gapped up. So let me make this bigger for you guys so we could really analyze this and break this down. Okay. So the stock gapped up. This is the gap right here, right? So HIMS opened up and it went crazy, right? It went crazy right here. Now, what ended up happening? As you can see, we got this big rejection right here. Now, at this time, I was in a different trade, so I didn't catch this. But I got out of my previous trade and then I saw it coming down right here. Okay, so I saw it coming down right here. So what did I do is I flipped to the 5-minute time frame and I said, okay, where we at? I knew that we could be coming down to this $56 level right here. And so I saw that we had about 30 seconds left until this candle was closing on the 5-minute time frame, right? Now look what happened. 30 seconds left on a 5-minute time frame, and then look what started to happen. It closed below this yellow line, which is the 50 EMA. So once it closed below the yellow line and I saw all this selling pressure right here, I knew that the only reason is because it got to fill this gap right here. So I said, I'm going to take an entry. And so I ended up taking an entry on HIMS right here. Okay. So I took an entry on HIMS right there to the downside. Okay. On this candle under the yellow line, which is the 50 EMA. All right. So I took an entry right there. All right. Now, I was in this trade for less than a minute. All right. Because it has so much heavy selling pressure, this joker dropped down all the way to right here within a minute. Within a minute, it dropped down right here, and I was up 20%. Okay. So I was up 20% right there. And what did I do? I exited the trade. All right, so I took my profits right there. I exited, and that was 20%. Okay, now I saw that, and I said, okay, it's bound. And then I got out of the trade. This is 10 minutes went by. I saw it bouncing off of the EMA on the 5-minute. So I said, I'm gonna ride it back up. I thought it was gonna immediately reverse and come back up here, but it's looking like it wants to start doing that today or tomorrow. It's gonna come back up here to like $64, right? So I said, okay, we right here, we bouncing off this EMA right here. Let me take a trade and let me enter in right here, okay? So the second trade, I took an entry right here on this candle. All right, right there. Right, so I took my entry right there. Okay, I saw this candle close on the 5-minute. I was down over here around about like 12% at one point. And then I saw this candle close, so I actually added a contract, or I think I added 2 or 3, right? It helped me with my average cost. And then I stayed in for this candle, and then I literally got out once I saw it rejecting off of that 50 EMA right here. Okay, so we see that yellow line again on the green candle. Boom. Right? I got out at the top of this green candle right under the yellow line right there. Right? Exit. And that was 12%. All right? This trade I was in for about 9 minutes. All right, about 9 minutes. So I played everything off of this powerful 50 EMA right here. You see what I'm saying? The 50 EMA is very strong and it's very powerful. Once it was under it, it rejected off of it. Boom, we ride puts to the downside. It bounced off the 200 EMA, which is another powerful level. Boom, we ride it to the upside to the 50 EMA, it rejects, and then boom, I got out perfect timing, because look what ended up happening. It ended up coming down here, and then it's been coming down, right? So it created 1, 2, and about 3 bottoms. So it looks like it's a triple bottom right here, which means that HIM could explode to the upside over the next 2 days. And also, these are 2 fair value gaps right here, and here's another one right here, which means that HIMS really could and should be coming up to about $64 to grab some liquidity. All right, but first trade, we got it to the downside under that 50 EMA, had a heavy selling pressure, rejected, came down. It ended up coming down to fill that gap. But then right here, saw it bounce off the 200 EMA, took an entry, rode it up to the 50 EMA, took my profits, and we collected 32% returns on our money, and we did that in 10 minutes. All right, so literally, it was that simple. All right, I was in the market for about an hour today, about actually 58 minutes. All right, in and out today, but those 2 trades, 32%, I was in those trades for less than 10 minutes total. All right, I want you guys to understand that trading is not about getting rich quick right now. Trading is about understanding how to use these tools, EMAs, your mind, reading the charts, reading the trends, and then taking that information and making rational decisions with rationale and allowing yourself to compound your money over time so that you could create financial freedom for yourself. All right? This is how you play the game. All right? Go with the trends. Stop going against the trends. Understand what a gap is. Understand what a gap fill is. Right? Understand these small things. And when you understand these small things, what ends up happening? You can change your life. All right? Stock market is not a scam, right? Some people say it's risky and all this other stuff, but it's about, what do I always say? The more you study, the less you worry. Okay? The more you study the game, the more efficient you will become with trading. All right? So, like I always say, make sure you get up out of your head, go get into this world, because your head is a dangerous place to live. All right? And also remember, the more you study, the less you worry. All right? I'm going to see you guys on the next video. I hope that this helped. Drop something in the comments. Let me know what you liked about it, how much money you made, and I'm going to see you guys on the next video. Peace.